What's up, everybody? Welcome to another edition of Swinging Sunday Scan, where we review swing trades in both the American and Canadian markets. This edition is for March the 6th, 2022. Before we jump into the markets, guys, if any of this content helped you out in any way, please do me a huge favor and hit that like button. Hit subscribe if you want to see more content like this in the future. Click that bell if you want to get notifications anytime I put out new content. Let's jump to it. Last week, looking at the SPY, we were hoping for a push higher past that 444 area, possibly up to that 450 area. We didn't get that. We pretty much got a range-bound week where we put in a lot of choppy days, flip-flopping, up and down, range trading within a box. Basically, the ES futures gives you a better idea of the range in which this traded in. We were basically looking at a box like this. So going into next week, I'm going to point out two key levels that I'll be watching. It's going to be the 444 area, and let's call it 427. I'm recording this at 9 p.m. on Sunday, and the ES is currently open, and you can see we've broken below that level at this time. What happens by the morning is anyone's guess, but with momentum starting as soon as the futures opens, I'm going with a short bias. So even though we didn't get that push higher, which would have been ideal to start going short along with the market, with the chop, I would call that a battle and possibly even uncertainty. With those things taken into mind, along with the overall downtrend of the market, I'm going to continue my bias short until we find a definite break in this pattern. The QQQ looking even weaker, and looking at the NQ NASDAQ futures, we opened this evening with an even deeper push to the downside. So basically, my plan for the rest of this week, we'll be looking for long opportunities with stocks that are showing relative strength to this push down if it continues, and playing any relatively strong stocks with a bounce on the market. Going into some previous ideas called in other weeks. WELL is a trade I am still in. We are finally seeing some momentum back to the downside. Whether this follows through is hard to tell, but I have moved my stop down to $4.56. UVV showing some great relative strength to the market, went to full target. WMS was another one I was in, had a great start early on, but took me out for a full stop. ENB was another one I was in and went to full target very effortlessly. This one was definitely the trade of the year so far. Going over some trades from last week that never really materialized. CELH, this one had a really choppy bounce and didn't really set up any type of trade after earnings. If I were to take this trade, the risk to reward was really bad, so I just ignored this and didn't enter. HYFM was another one we are watching for a potential push higher into that red circle area. That never happened. It just broke down, breaking the lows of that support area of $17, so I just ignored it and moved on. BOOT was one that looked pretty decent, but I did enter some other stocks that looked a little bit better, and I didn't want to go too heavy on the longs or the shorts, so I had to limit the stocks I was planning on entering. MEDP, I think, was one that we talked about just removing from the list. This one also didn't look that great, so I just ignored it. We didn't get quite the bounce I was looking for. Last of the ones that didn't materialize, and maybe the least, BLFS. Again, not much of a bounce into that green 50% retrace area towards that $30 mark, so ignored it and moved on. Some of the trades I mentioned last week that met my criteria that I entered. First being CPNG. This one bounced right into that resistance area last week, and after earnings set up a decent area to enter. I entered and we had a really big red day on Friday, so I'm hoping for a continued momentum on this one. The range that it put in on Friday, it could easily hit target on Monday if it put in the same range, but we'll see what happens. ATEN was another one that I entered because it met my criteria. The bounce wasn't super big, but it did hit that red 50 period moving average line, and it was very similar to this bounce here. Now this one had a gap over here, and this one had a big red day over here, so I'm realizing now that this one, if we get a decent move on it on Monday, I might just exit this just for risk management reasons, because I probably should have ignored this one to begin with, but I am currently short on this one, so glad I'm reviewing this now to fix my mistake on Monday. The next one that I entered on Thursday was MODV. This one met my criteria Thursday evening. The last two that I entered that I mentioned, I also put in my orders on Thursday, and they all triggered on Friday. This one, again, put in a decent bounce, put in a decent entry after earnings. We're nicely kind of just getting close to that 50 period moving average. Market's looking weak, so hopefully we get some follow through on this as well. And the last one that I entered in short was AMSWA. The bounce on this one wasn't super ideal, but looking at the movement and range of this one, I didn't want to miss an opportunity for a move lower. So if we get tagged on this one and we move higher, closer to that red area, which is a pretty good resistance area, and also closer to that red line, I'm probably looking at re-entering on this one just because of all the other factors involved with this stock. I missed one that I mentioned last week that I did not enter. It was SRI. This one is actually looking like a potential entry. However, I'm so heavy on the shorts at the moment that I don't think it would be wise to add another short to my portfolio at the moment due to risk management. I don't want that kind of exposure all on one side. If I can balance it out with some longs, maybe exit ATEN. This one might be a candidate later in the week if we get an opportunity for a decent entry. Let's get into some new ideas. So I have a little bit of a mix of US and Canadian stocks. I scanned through 566 US stocks and 81 Canadian stocks. I have to say I'm noticing a bit of a pattern. If you go back and you look at the rest of my scans for this year, most of the scans that were focused on the short side, I was able to find easily double digits, sometimes into the 20s. It wasn't hard to find short ideas. If you go back and you look at all the long-sided scans, I struggled to find double digits. This week was not an exception. I was only able to find 5. And I have to be honest, all 5 of these ideas aren't top shelf. I wouldn't even say they're exciting in the least bit. And sorry, I made a mistake. It's 4. I have one short idea that I'm going to watch like a hawk for a bounce later, probably not even next week, but the week following that. Also, I think one of the reasons why I'm not too excited about any of these ideas, because last week, because we were range bound and we were choppy and sloppy, a lot of the pullbacks on these long ideas where we're looking for a reversal to go higher are also choppy, sloppy, and overlapping. So in any case, I tried my best to find some longs, and here's what I found. INSE, this one is a stock that has been trending on the weekly higher and higher for many, many months, and we have a pretty decent pullback to this yellow line, which is a very significant 200 period moving average. You can see there was 2 other tests here in December of last year, here at the beginning of the year in January, where both situations we ripped. We're currently in an uptrend where we have a low here, a high here, We put in a higher low here, and we put in a higher high over here. We're currently dipping to this 200 period moving average, but what's wrong here? Oh my goodness. Look, earnings. That's if this year had a title, it would be why is earnings always in the way? So we don't have many days here. Also, the risk to reward on this bar is not great. What I would really love to see is maybe two, maybe narrow range bars, and we just look to take a quick profit before earnings. However, that is pretty risky because I don't like holding even the day before because things can get wild. But I will watch this, and for the lack of any better ideas, this is, I think, my top watch. NWL, wow, what an ugly chart. But we have some resemblance of some kind of potential stage one basing here where the stock has kind of been going sideways for a while. We have a little bit of a triple bottom here where we've tested this $21 area 3 times. We had earnings, and with a high spike in volume, we saw a big push higher for 3 days. And we've had not even remotely a nice pullback, of choppy and gappy, and also a choppy overlap sort of base over here. But if we were to ignore the ugliness and the gaps in this chart, this is a decent play to the upside. If we were to play over this $24 area with risking under this $22.65 area. But again, it's not really something I'm really comfortable playing. But again, the best pick of what was a lot of junk out there. Next is ARR. This one I kind of drew in what I'm hoping to see. We have a pretty significant pivot here at around just under the $12 area. We just announced earnings on Thursday, and we're getting a pretty steep pullback. What I'm hoping is we get a pullback to this area. The nice part about this one is it's going to take probably at least a couple days, maybe even a week to get to this area. And that's perfect because if we do see further momentum to the downside for the overall market on the SPY and the NASDAQ, this will give this time to also pull back to this area. And maybe by the time the market is ready to bounce, we might be able to time a bounce with this stock as well. So what's wrong with this? Well, look at how gappy and choppy this stock was prior to February the 8th. I mean, super, almost like spotty and dotty. I mean, this is a stock that I would never trade at all. However, what we see though is on February the 8th, there was this massive spike in average volume. So really, this spike in volume is actually a really great thing. I mean, it means that this stock was on like literally nobody's radar for so many days or months, and then all of a sudden all this volume started coming in, and we got volume along with price movement to the upside. So I mean, if you were to put one and one together, there's interest in this stock, likely buying interest, and we've put in a big move. Earnings came in, saw a little bit of a drop. I don't base my bias on what happens to a stock on earnings. All I see now is, okay, there was no gap. Great. We're getting a pullback. The stock's getting a rest. The buyers, hopefully, what we're planning on playing is the buyers starting to come back in when this stock goes back on discount, around 50% from the bottom to the top of this move. And it's landing right here at this prior resistance area, which is a psychological area around $12. So my plan, I'm going to watch to see what this happens. And hopefully we see a move into this area and we get an opportunity for a good entry. Last stock I saw for a long was CARG. I just erased a short idea on the stock because if you go back, I don't know what week this was, but I called this one as a potential short entry, and it was a decent one. If you can see, we put in a double top, we put in a low here, a lower high here, and a lower low here. And I was probably looking at entering somewhere in this area, but since this has happened. This stock on earnings gapped up, put in a huge green bar, and it blew past one pivot, two pivot, and a double top all in one day. Okay, so also on volume. And then look at this retrace. Like if I had a textbook that I had to write, this retrace, in my opinion, is very, very smooth. And wow, if we get into this $40 psychological area at a double top, my goodness, this would be the trade of the year. Maybe. Anyways, I'm excited about this, but trading doesn't mean that we're going to get a trade all the time. What we try to do is get in as many positions as possible where we can find opportunities to get in a trade that we think has an edge to work. But when we're looking at a trade like this, where the setup isn't even close to coming to fruition, we have to be patient and we have to accept that that trade may never come. This stock could rip on Monday, blow past the $50 psychological area, and we would be sitting going, oh well, it didn't do what we wanted to do and there was no trade, so I'm going to let it go. We don't chase, we have a plan, we stick to it. End of. That's it for my long ideas. I will be watching MCD for a possible bounce, maybe into this 250 area, or even like 245, anywhere. Okay, let's draw the Fibonacci. So if we take the range from the top of this pivot down to the bottom of this pivot, that green box is drawing in what I would consider like a Fibonacci strike zone. So psychological numbers within this area around 250, 245. What do we have around the 245 area? We have a pretty significant tail where buyers recently started buying up the stock and the stock bounced. We broke through that area. Say it with me. What once was support will now become resistance. So 245 area will be an area of interest if we get a smooth bounce. McDonald's trades really choppy, and borderline breaks my rule on not trading gappy stocks, but overall it trades pretty smooth and there's no major gaps here that could break the bank. So I also have been noticing that stocks that have worked once are more likely to work again. So I like to keep stocks that have paid out before on the list for further gains. That is it for today, guys. I appreciate it if you stay to the end of the video. Hit that like button if you found any morsel of useful content in this video. I would really appreciate it. If you want to see more content like this in the future, hit subscribe and then hit that bell if you want to get notifications anytime I put out new content. Thank you so much, guys. I think the market is about to get crazy. The situation in Ukraine is super sad, and I hope that we find some sort of peace throughout this situation. I don't have any profound words to say about it other than that it really breaks my heart to see what's happening there. I have traveled to the Ukraine in the past, and it was an absolutely beautiful country, beautiful people. I just can't imagine the hardship that's happening over there. In my heart, I just hope for a swift end to this senseless violence. Please trade safe. Always trade with a plan. Be well, and we will catch you on the next one.